June was a poor month for financial markets as global equities, government bonds, corporate bonds and commodities all lost ground. Volatility was high as concerns about the consequences of a Greek default fuelled fears of a Lehman-type event for the global economy. Economic data in the US also disappointed expectations, leading to a sell-off in risky assets for the first 3 weeks of the month. However, better news from Greece towards the end of the month boosted risk appetite, leading to equity markets regaining some of the losses made earlier in the month. The Greek government debt crisis spiralled in June, with riots and protests against further austerity. However, some of these risks eased slightly after the government won a vote of confidence, managing to successfully pass the additional €6 billion austerity and €75 billion privatisation programme. Upon passing this programme, the EU and the IMF will issue extra funding to Greece. Although details of any debt restructuring have yet to be worked out, they will involve some private sector involvement, most likely with bondholders voluntarily swapping their bonds for those of longer maturities. Economic data in the US continued to disappoint expectations, implying that the pace of economic recovery is likely to slow over the coming quarter. Business confidence, as measured by the ISM manufacturing survey, fell from over 60 to 53.5. The benign recovery in the labour market also slowed, as the non-farm payrolls for May showed that only 54,000 jobs were created during the month. The Federal Reserve downgraded its growth forecasts, indicating that interest rates will remain on hold for an extended period. However, it appears for now that the weaker economic data has come as a result of the supply chain problems following the earthquake in Japan. Commodity markets were also volatile during June, particularly oil, which saw a sharp increase in price after the OPEC cartel said that they would not be changing daily output. However, these gains were reversed after the US Department of Energy said that it would release some of its reserves to combat the supply disruption from the troubles in Libya. All in all, the energy sector was down over 5%, while agriculture and base metals also suffered losses.